I did not get most of the morning to watch the markets, but what I did get to see this morning, I draw a conclusion that these markets are hoping for any type of good news, completely desperate for any type of good news. We watched the markets drifting sideways most of the day. Although the Dow Jones finished up 341, NASDAQ was up 83, but right around 1:30 Eastern time, Atlanta Fed President Raphael Bostic saved these markets and pretty much created a frenzy, a buying frenzy today with his Bloomberg headline. Bostic came out and said that the Fed could be in position to pause by mid to late summer. He also said that the Fed has a ways to go. Higher rate endpoint could be needed. Now, that's not positive, that's hawkish, but the markets didn't care. They just dwell on the hope. The markets are looking for any hope. And by him saying that the Fed could be in position to pause by mid to late summer, that's all that they needed for a major reaction, for a major buying frenzy, saving the markets yet again today. Now, what we all need to know is that Raphael Bostic does not have any vote in this, but by him coming out and saying that, he saved the markets today. He gave the markets hope. To me, this is just so desperate, so desperate. Here, the hedge today. Bostic batters stock bears, but bond yields soar after record inflation. Again, he is not a voter. He is a non-voter. And we're seeing, we saw the 10-year bond yield and 2-year absolutely flying off the charts today. Jobless claims improve again as labor costs soar more than expected. So 2,000 less people filed for jobless claims last week. That number was 190,000 versus the 195,000 expected. Not good news for the Fed. So Bostic can say all he wants. There's still a very good chance that the next Fed meeting in a couple weeks, we see a 50 basis point rate hike. More than likely it will be 25, but we're going to continue to see more rate hikes. We're going to continue to see the Fed keep rates higher for longer. And I think that we're going to see a 50 basis point rate hike here very, very soon. If it's not the next meeting in a couple weeks, it will be the one after. Getting back to what I was just talking about with the 2-year and 10-year bond yields. 10-year bond yield right now, 4.062, the 2-year at 4.889. We are seeing the 2-year Treasury yield reaching highs not seen in more than a decade. So we have this inversion continuing, yet nobody wants to admit that we're in a recession. And as I've said in the past, by the time they admit that we're in a recession, you will know that we are in a depression. Mortgage rates jump back over 7% as inflation fears drive yields higher. This on CNBC. They're reporting the 30-year fixed mortgage at 7.1%. Anybody with a brain knows what this is going to do to housing. It's going to continue to push sales down. Prices are going to follow. There is no doubt. Look, when we look at what's happening in the 10-year, that means to service debt, whether it's an automobile, a mortgage, credit card debt, whatever, the cost to service that debt, the cost to go and get a loan is going to continue to soar. And people right now who are paying everything with debt are going to get themselves into deeper and deeper trouble. Here's another one today from Fox Business. U.S. home prices could plunge 20% amid risk of deep housing slide, Fed economist warns. This is, when you look at the data from June to December of 2022, home buyers or homeowners lost $2.3 trillion in equity. This is a major, major loss. And as we continue to see mortgage rates going higher, I believe they're going to go over 10%. This is going to cause a massive price correction. You could call it a collapse. I don't think we're going to see a correction. I think we're going to see a collapse in the housing market. And it's going to be a very dramatic one. And again, it's going to be because of these rate hikes. It's going to be because of layoffs, and it's going to be because of inflation. People think it can't be as bad as 2008 because the banks didn't make these irresponsible loans. Well, this is going to be much worse because you still have people putting down the bare minimum on a lot of these homes. You have thousands of people daily losing their jobs. You have inflation at a record high, and you're going to continue to have more problems. Again, inflation, layoffs, and interest rates, a trifecta here of problems that are going to make 2008 look like a Sunday school picnic. The economiccollapse.com, bankruptcies absolutely soar as America's absurd debt bubble begins to implode. Year to date, the total of bankruptcies represents the fastest pace of companies filing bankruptcy since the aftermath of 2009. Not a good indication of what is happening. The end of all this federal debt is putting many Americans and businesses under mounting pressure, leading to a spike in bankruptcies. Total bankruptcy filings are up 19% in January to 31,087, up 19% from a year ago. The number of Americans who have filed for Chapter 7, Chapter 11, Chapter 13 shot up 20% from a year ago. What is this all telling us? There are still people out there, and I'm sure somebody will write in the comments and tell me that everything's fine, that I have no idea what I'm talking about. I'm just reporting the data to you. But there are people out there that believe everything is fine. And maybe it's good where you live, maybe it's good in your life, and God bless you if it is. But I'm looking at the overall picture. I'm looking at the data across this country. And if we look globally at over $300+ trillion of debt, the talk now and the chance of World War III, and I look at the weapons that we're sending over there, that we are depleting our own systems, our own weapons right here to send over to Eastern Europe. On top of that, we've been depleting hundreds of millions of barrels of our strategic petroleum reserves, putting us in a very, very vulnerable position here, ladies and gentlemen. So we look at debt. We look at what we're doing with our oil reserves. We look at what we're doing with our weapons. It will take years just to replace those weapons. And the replacement cost of all that oil is going to be astronomical at a time where we're bankrupt. So this is not looking good. Again, there are people out there that are going to disagree with me and say everything's fine. Look, it's a beautiful day. The sun's out, crystal blue skies. It looks wonderful. But you cannot be blinded by the hope, by this delusion that people just hope that this is going to go away, so everything's going to be okay. Don't be negative. Don't report the truth. Don't report the data, the facts. If you start connecting the dots and you are looking at the data that I'm looking at, if you're looking at this economy, you know we're in very, very big trouble. Credit Suisse crashes to all-time low after boosting deposit rates to reverse bank run. This on Bloomberg. The bank run at the end of 2022 was worse than the bank admitted. The stock today is down 5%. Another one, Bloomberg reports Blackstone defaults on $562 million commercial mortgage-backed securities as it keeps blocking investor withdrawals from $71 billion REIT, Real Estate Investment Trust. The carnage is coming fast and furious, folks. And you look at what's happening to these big banks. You look at what's happening to companies like Blackstone. It's incredible. But, Blackstone being the largest commercial landlord, private equity giant, and you see that they're defaulting on a $562 billion bond-backed portfolio of offices and stores. What does this tell you? What does this tell you? We're going to see commercial and residential real estate get absolutely beaten. And at a time where we're going to have less and less qualified buyers to jump in here, at a time where this country is bankrupt, a time where so many consumers are bankrupt, so many people just hanging on by the credit cards, and we're going to find out that a lot of these banks, a lot of hedge funds, a lot of these institutions, and some of these major landlords have gotten themselves into very, very big trouble. So it's not always sunny. It's not always blue skies with teddy bears and rainbows. We're heading into some very, very treacherous times, ladies and gentlemen, and I cannot stress enough. I don't give financial advice, but I cannot stress enough to own real things, to own things outright, to get the debts paid off, get your house paid off, get your cars paid off, get the credit cards paid off, have some dry powder at hand, meaning cash, have some capital. If you have to go out and work an extra side hustle or two side hustles, do it. gather as much cash as you can right now and get that debt paid off and have some capital laying around so that you can take advantage of what is coming. Invest in yourself, have a skill set, have multiple skill sets. Invest in yourself, invest in your health, invest in knowing how to do things, invest in your own financial portfolio, be your own central bank. This is no joke, ladies and gentlemen. This is no joke. It almost feels like we're in a calm before the storm right now. But today, market's up, but it was a joke. Look what they had to do. They had to roll out Bostic to infuse some hope into these markets. Even though he said a few hawkish things, all the markets needed to hear was one positive thing in order for them to go into a frenzy. How long is this going to last? And it's not real. It's all an illusion. Do you really believe because Bostic came out today and said that, well, the Fed may lay off the gas pedal? That's not a pivot. If the Fed stops raising rates, that's not a pivot. They're going to keep those rates up there for longer. But he doesn't get to vote in this. And so I do believe we're going to see 4 rate hikes this year, probably 3 of those will be 25, 1 of those will be 50, and it will do absolutely nothing. Inflation is going to beat the Fed here unless the Fed gets extremely aggressive and the government stops spending. This is a big problem. The Fed can raise rates every month, but unless this government stops spending, we're going to be in very, very big trouble. We're just going to continue to spin our wheels, and people are going to continue to lose this battle against inflation as their purchasing power is going to be absolutely destroyed. It's being destroyed every day, and it's going to continue to get worse. We cannot beat inflation. We cannot win this battle with the Fed raising rates 25 basis points and the government spending billions and billions of dollars. We're sending weapons now over to Taiwan. We're sending weapons and money over to Eastern Europe. Look, I oppose war. I don't want to be in war. I hate war. I'm not going to sit here and get political with all of you, but we are talking about dollars and cents here. We are a bankrupt nation. We're trying to fight inflation while we have billions and billions of dollars going out literally every week to support all of this. So we'll see how it all ends, ladies and gentlemen, but I can tell you this, I'm going to keep doing the same thing. Cash, gold, land, patience, and security, and walking close to God. I'm going to leave it there today. Have a wonderful evening. Thanks for watching. Please give this video a thumbs up, share it, and make sure you subscribe.